What's up, guys? Welcome to the channel. Today we're diving into a company that you probably shop at all the time, but you haven't thought about making an investment in. We're talking about Target, ticker symbol TGT. Right now, Target stock is trading at around 87.85, really close to its 52-week low. The dividend yield is over 5%, and the stock is valued way cheaper than Walmart, Amazon, or Costco. I think this is an overlooked dividend gem and due for a correction soon. Let's break it all down. We'll break it down the fundamentals, the recent news, price predictions, the risks, and finally how it stacks up against the competition. Target is one of the largest retailers in the U.S., operating nearly 2,000 stores nationwide. They generated over $100 billion in revenue last year alone, and this is a powerhouse in American retail. What makes Target different from Walmart, Amazon, or Costco is its positioning, though. Target doesn't try to be the absolute cheapest. It focuses on being affordable and stylish. And not only this, but Target has a strong moat with private label brands, and these brands drive higher margins than selling name brand products, and they keep customers coming back specifically to Target for these exclusive items. One of the things that you can look at with Target as an investment, you're not just buying into a retail store, you're buying into a trusted brand with nationwide scale, loyal customers, and the ability to compete on value without sacrificing style. It's trading at under 40 billion market cap, and it's really a deal right now if I'm looking at it right now. So let's dig into the fundamentals, and I'll explain what each one actually means for you as an investor. The revenue of 105 billion annually is the beast of the company. Pulling in over 100 billion each year tells you one thing: stability. Target isn't going anywhere, and that's great for foundation and for long-term investors. Not only this, but earnings have dropped 21.5% year over year. So the earnings dipped, but here's why that's actually bullish long term. Because retail always takes hits during inflation and tariff pressures. The bar is now set low that any stabilization, not even crazy growth, could send the stock a whole lot higher. And not only this, but the operating margins look thin, but that's retail. Walmart runs at about 4 to 5% too. So the key is, while Target is still making money, while investing in digital sales, promotions, and new store layouts, when these short-term costs roll off, margins could bounce back to 6 to 7% in margins. And this margin expansion would be a direct earnings booster, which could drive this stock price a whole lot higher. The PE ratio, as we can see here, is about 10.15. This is where things get exciting. The average retailer trades close to 15 times earnings, sometimes even higher. So Target is just at 10 times. That screams heavy under a valuation. And when you're basically buying a profitable $100 billion company at a discount, this means Wall Street is valuing Target is just at 38 cents per $1 of sales, with their price to book ratio of 0.38 times. Compare that to the industry average of $1.15. It's a massive gap, and when sentiment shifts back into Target's favor, the stock has serious rooms to re-rate higher. Not only this, but the dividend of $4.46 per share annually is about 5.1%, and this is one of the best parts. A 5% dividend, it's one of the best dividends you're going to get from a company of this size, and it's going to continue to grow in time. Not only this, one thing I wanted to point out is the debt of 16.5 billion and the tangible book value of that being 33.85. So the debt does exist, but it's manageable relative to the revenue. And with tangible book value at 33.85 cents per share, that's real asset backing, and it provides a cushion if sentiment stays negative. So bottom line, the fundamentals show stability, undervaluation, and stockholder rewards. This isn't a company on the ropes. It's just one being overlooked by the markets, as we can see recently. So let's look at the recent news we've seen. We've seen Target run its Circle Week, which has been the biggest one ever, and is pushing loyalty and traffic into the stores. Not only this, but the analysts expect 24.41 billion in revenue and $1.64 in the next earnings report. While the competitions may be flat, stabilization is the key here in this next earnings report. The only negative in the short term is tariffs, because Target imports more than Walmart. They may need to raise prices by about 8% versus Walmart's 4 to 5%. But here's the silver lining I'm seeing here. Target has proven it can pivot fast, and their private label brands and customer loyalty could help them absorb these pressures better than the analysts are expecting at this point. So analysts have put the price target for about 107.55, which is about a 23% upside from today. The high estimate is about 147, while the low is probably right about where it's trading right now. So let's put that into real numbers. I got my base case here on the screen. I see 108.64 in the next year. But let's put their numbers into a little calculator here. I got $1,000 investment today could grow into 1,230 in a year. 5,000 could be 8,000 in 3 years, and 10,000 could double over to 22,000 in 5 years in a bull case. Before even factoring in the dividends, which you could add in another 5% dividend yield on top of that, and your compounding returns while holding will look very well. And here's some of my other cases I'll put up on the screen right now, where I see the worst case scenario and I put my best case scenario for the next year. Some of the consumer spending could slow down. Also, that's some of the risks I want to bring up. But remember, Target mixes essentials like groceries and household good, which are sticky. Thin margins could be pressures, but that just means more upside when costs normalize. Tariffs are a concern, but this could be a catalyst for Target to double down on private label sourcing, which also has crazy much better margins. So one thing you want to look out for is this next earnings report, which we're going to see in November. And there are risks. They're all temporary, though. As we've seen, Target is an established brand with a strong presence in the market, and I don't think it's going anywhere anytime soon, if you had to ask me personally. And based on what I'm investing in, especially as a dividend investor, this is one of the best investments you can make, as it's going to grow as well as the investment grows. So some of the things I want to compare now are the competitors. We got Walmart, which is bigger and cheaper on groceries, but not as strong in design and branding. Amazon, it dominates the online market, but Target has a physical convenience that Amazon cannot match at all. And the Costco has the membership model, which has a lot of loyalty by a lot of customers. But Target wins in variety and style of different products that they provide. So as we can see here, Target's edge is that they can roll out new trendy products in 8 weeks now versus the 7 months that it used to take. And a lot of companies are still taking that 7 months because it's hard to get these products in a whole variety of stores across the U.S. And that speed lets them ride cultural trends faster than their competitors. Combine that with national scale, and you've got a retailer that still punches above its weight. Some of the things I'll point out here as we end is that Target is undervalued, underappreciated, and oversold. You're buying a $100 billion revenue giant at just 10 times earning, collecting a 5% yield. While you wait and getting it near 52-week lows as we are right now, if you still believe in the stability, dividends, and long-term growth, Target looks like a no-brainer into your watch list right now at least, and maybe even a buy. So what do you guys think? Drop down in the comments down below. Is Target one of the most underrated dividend plays of 2025? Drop all your thoughts in the comments. Drop any stocks you guys want me to check out. And if you found this any value in this breakdown, hit that like button, subscribe for more deep dives, and I'll see you guys in the next one. Thank you. Peace.